Hello. Just a little reminder for everybody that this is Tuesday, October 22nd at 4:30 p.m. Eastern Time, 1:30 Pacific Time. We are proud to feature the Turtle Trading Team, which is going to announce the new stock trading secret strategy. I am the host, the presenter. My name is Ludovic Mark Coutinho. I'm part of the Turtles Trading Team member in cooperation with ffrtrading.com. I just want to thank everybody for your attendance. It's quite a large crowd, actually, in several different continents. And I want to thank you very much for your attendance. We really appreciate this. And especially you fellows and gals out there in Singapore with the Blue Buddha Investment Group. I know you guys had to get up really super early, so I appreciate you getting up so early, but it'll be worth every minute of your time. There also is quite a contingent in New South Wales, Sydney, Australia. Thank you very much for staying so late, and especially you traders out there in London and Paris. I see that some of you are part of the economic summit that we recently had there. So that was really awesome. And of course, welcome to all the North Americans. Without you, where would we be, right? Exactly. We're going to be going over a breakdown of what the actual turtle strategy, and we use the acronym STOP, STOP, which stands for the Stock Turtle Options Program. We're going to break it down. We have a special guest. I'm pretty excited about this, but we're going to go over, and that guest will go over the technical aspects of the new Stock Turtle Options Program. And some people have always asked, for those that have met myself, just what I look like. This is just actually a couple of pictures from the Paris Economic Summit that we held, and also at the Washington Mayfair in central London. It's a beautiful hotel, my God. It was built in 1913, and it's all, for those of you who may have been there, it's an Art Deco hotel. I love Art Deco, and so it's right next to Hyde Park, and short walk to Buckingham Palace, so you can maybe try and say hello to Queen Elizabeth while you're there, right? It was fun. I want to just explain some of the features of the Penta pack in a moment, but I do want to review who FFR Trading is. I know that most of you know who we are because we're pretty big in our space, but for those of you who are new or don't know, I think a review is in order. We've been evaluating trading and investment strategy since 2006, so we're not kids on the block, right? We've been doing this for, 14, 15 years. Whatever market you're interested in, whether it's the Forex, futures, stocks, options, or even commodities, we will help you find and locate very successful strategies that actually work. We select authors whose systems are developed and represented in a fair and ethical standard. We don't discriminate, and we utilize time-tested results. One of the things that we're quite well known for, actually all over the world, is that we've developed a very, very reliable 8-step certification process that has a lot of built-in checks and balances that will allow you to evaluate any alternative investment strategy. And I'm going to go over just the details, not in depth, but at least to give you a broad view of it, because it is very successful. There's not too many guarantees in this business, but if you follow these steps, you'll know that you're entering into a vetted out strategy that actually has works with the current market conditions that we're facing. So the first step is that each developer, they have to be referred to us by a trusted third party. They need to be certified, registered. At the absolute bare minimum, they have to have 10 years of development experience. And in some cases, we have over 3 decades or 34 years with some of the developers of our systems. All of our developers have to be licensed with the regulatory authorities, whether it's the CFTC, NFA, the Securities Exchange, etc. All of them fill out a very comprehensive application. They fill out an in-depth survey to even begin the process. By the way, our process can take anywhere from 8 months to a couple of years, so it's very in-depth. We want to verify that the trading rule is real and it actually works in the current market conditions that we're facing. Our typical strategy is going to be mechanical and quantifiable. We have to have documentation of 10 years of trading experience. So we need to see brokerage account statements by 2 independent different brokerages that are US based and also in London that are in good standing. The developers are required to show some performance of back testing and also current forward testing of markets so that we know that it's actually working right now. Each system developer has to provide the brokerage accounts, as I mentioned, but they have to be independent brokerage. It can't be all at the same brokerage. And that has to be, ideally, we like to see 5 years. So that's the 8-step certification process. And really, I don't want to spend too much more time on it, but really was key to us having the great success that we've been experiencing now, 10, 12, 13 years later. I want to go over the Turtle Trading Penta pack. Penta from the old Greek meaning 5. Many people have heard of the Pentagon, so it comes from that. There's 5 strategies. I'm going to go over each strategy. The first strategy and the most famous strategy, and the one that was started over 3 decades ago, was the Turtle Commodities, and that trades baskets of commodities that we look at that have trending potential. And you can start as low as a $15,000 basket all the way up to $500,000. The second, and we use legs, kind of like the legs of a table or a coffee table. So we use that analogy so that you can see it and visualize it. So that's the first leg, which is the Turtle Commodities. The second leg is the Balanced Trader. That trades indices. It trades the S&P 500, the Dow Jones, and the NASDAQ, all minis. And then the third leg is the Turtle Forex, which trades the G7 currency pairs. The reason they're chosen is that they're the most liquid currency. They have a tendency to trend for a longer period of time. Also, they're the top economies in the world. The fourth leg is the Turtle Options on ETFs, which trades options on ETFs simply by buying puts and calls. That strategy, by the way, has been generating over 130% per annum over the last 5 and almost half years. And then the final leg is the Turtle Stock Option Program, which we affectionately call STOP. And it trades the Fortune 500 companies, and again, simply just buying puts and calls. There's also, the Turtle team is also a prolific writer of educational books and materials and self-study. And there's just an example of what you see here. Let me go to what we're going to be doing, and it's exciting. You may want to even take some notes, but what we're going to be doing is introducing one of the Turtle team members and actual co-developers of the new stock program, stock option. He will be reviewing the actual trade alerts, what it looks like if you're part of the service that we provide. We'll also show you how to exit a position, and we'll also show you some examples of, oh, hang on, I think I might be having a little technical difficulty here. Somebody said they couldn't hear us. Let me go back to where we started from. Can anybody of you tell us where we lost the communication? Okay, thank you very much. Appreciate that. Yeah, so what we're going to be doing is we're going to be introducing one of the Turtle team traders, actual co-developers of this system. We're going to go over the academics of the trading. We'll review the performance statistics since it was started in January 4th of 2018. We're going to break down how a trade is entered into. We're also going to review some actual trade alerts so you can see it as an example of what you would be getting. And then we'll also show you how we do, what are the rules to exit the position, various trades alerts. You'll also see an example of what a trade recap is, which we do every day. And also we'll review the educational aspect and component of this service. Let me go over what it does do from an academic standpoint. It trades Fortune 500 companies. There's always going to be approximately 60 potential candidates that are monitored for profit potential. There are 30 specific stocks that have been identified
that are preferred to trade. This program stopped trades in what they call a unit of 10,000. So a minimum account size to control a unit would be 10,000. You're allocating $500 per trade alert. Somebody's asking how many trades. You're reading my mind or the screen, but it trades on average about 20 trades per month. The most trades you'll ever have at any one given time will be about 12. Doesn't happen all the time, but about 12. The alerts do come out during the market hours. So approximately after 30 minutes of the bell opening, they begin trading and the alerts come out. Buying just simply straight calls and puts, and they'll always be outright purchases. For the exits, we need to be flexible to close a trade at any time during the day, especially, again, rule-based if the value of the option drops more than 50% of our entry price. The other thing, too, and one of the reasons that we do wait approximately 30 minutes is that the new trade entries can easily be done when the market is open, and a lot of times there's overnight news which cause some of the bid-ask to puff up, the spreads to get too wide. So in order to get a fair fill, it's usually best to wait approximately a half hour until that market settles down. I want to go over the performance summary. We specifically did a small account so that we could show that it would work even with a small dollar amount. A lot of strategies require a lot more, and in this case, not really. This is a $10,000 one-unit account. And just below the heading where it says breakout momentum for turtle ops, you'll see 3 columns of data. And you can see that these trades are based on a $10,000 account where they're allocating $550 per trade. So if we look at the left-hand column of data where it says total net profit, let me see if it helps with my arrow. Can you guys see the arrow? Okay, great, thanks. You can see that this account has grown to over 50,000, 515 actually, over 50,515. What's really remarkable and quite dramatic is, I've been working with these systems for a number of years. I've actually been in the business for about a quarter of a century. I'm aging myself, right? But the profit factor, which is the fourth number down, is 4.373. And I see some individuals are asking, what does this mean exactly? Good question. It just simply means that for every dollar that the trading strategy loses me, I regain back up $4.37. Honestly, this is the largest profit factor I've seen in my professional career. It's insane. The trading period and the data that we're looking at is fresh. It starts on the day that we exited the first trade, which was January the 5th of 2018. All the way up to the end of the summer, basically. So about 6-8 weeks ago, okay? The middle column of data, if you can see my cursor, gives us the initial return of capital, which is staggering. It's over 500%. But putting these great returns aside, what's even more interesting is if we look at the largest loss, which is the last number in that column, you can see that the largest loss was less than $300, where the largest win was close to $4,000. It's incredible. Let's go to the final column of data towards the right, where it talks about the total number of trades. All of the trading strategies that we work with typically will lose more trades than it wins. And over time, the winning trades overcome the losing trades to give us a profit, right? This is the only strategy that literally gives us more winning trades versus the losing trades. And it does this, not quite, but almost on a margin of 2 to 1. So you'll see the total number of winning trades was 138. Total number of losing trades is only 82. That's truly, truly an exceptional characteristic of this particular strategy when we dissect it. Let's look at the equity curve together. It's in light blue, I think. I'm colorblind, but it's just below that. And you'll see on the X and the Y axis, on the X axis, you'll see that the trades are numbered from 1 all the way to 220 trades, which is the total amount of trades up here. Okay? And this is a beautiful equity curve, by the way. What I'd like to do is I'd like to illustrate this 4.73 profit factor. So let's say, for example, we would look at trade number, say 5. You'll notice that there's a slight dip below the previous equity. That's a drawdown, and then you can see it quickly recovers. Let's look at trade 7. Maybe that's 8 actually. You'll see it pulls back a little bit and then it recovers. Spectacular recovery. Here's another example of a drawdown. Trade number 30, I would say. You see that dip? Okay. Let's look at the longest length of a drawdown, which is another critical thing that you want to look at in terms of your disposition towards temperament towards risk. Let's look at trade number 126, maybe 127. And you can see that it went into a very modest drawdown up until about trade number, I would say 146. And then you can see that it has a spectacular recovery all the way up until this account's over $50,000. So this is why this particular strategy is so unique and one of the most demanded strategies out of all the strategies that we work with. And it's not so much the money that it's making, but it's the risk management tools that are built in place that give us these very, very, very modest drawdowns. Let's go to the next slide. And this is where we're going to introduce Mr. Jeff Davis. We're going to have a question and answer. I'm really excited about having Jeff with us because he is the co-developer. He's been programming with his father, Dwayne. These two gentlemen are literally a pioneer in the programming field when it comes to development of trading systems. And they've been doing it for, as I said, a quarter of a century. They've been actually working with the Turtle team for over 2 decades. And it really, really, truly is an honor to have Jeff with us today. He's going to reveal some of the trading secrets that are associated with the new stock program, the stock turtle options, for all of us to see. Hello, Jeff. Are you with us?
Yes, I'm here.
Oh, great. How am I doing so far?
You're doing great.
All right. Thank you very much. I'm going to throw it to you.
Yeah, okay. All right. Hello, everyone, and thanks for having me on today. My name is Jeff Davis, and I'm a member of the Turtles team. If you go to the next slide, you'll see a picture of me sitting in front of our monitoring system, and that's a typical day at our office watching charts. A little bit about me. I grew up in Southern California during the 70s and 80s. Around 17 years ago, I moved my family to North Carolina, which I love. I have approximately 25 years experience in trading and programming. My father, Dwayne Davis, who is also a part of the Turtle team, has been trading system programmer and trader for over 35 years. My father started our business assisting authors with their trading systems back in the 80s. That was back when the home computer was new at the time. So he's one of the early pioneers in computerized trading systems. Somewhere around 1993, I joined him, and we've been working together now for over 25 years. I currently trade myself. I trade options and ETFs, mainly the SPY and QQQ. I also trade options in stocks, mostly the ones we monitor for the Turtle subscribers. Over the years, I've written several trading manuals as well as assisted in various trading seminars. And both my father and I have programmed trading systems for numerous authors. Well, that's a little bit about me. Ludovic, I believe you have a few questions.
I have to say something to you, Jeff. That trading desk or monitors puts the Starship Enterprise to shame.
Yeah, that's actually one desktop, and there's 2 video cards in there. Each one handles 8 monitors, and
oh, wow.
I have 15 actually going there.
Yeah, let me go over some of the questions that are coming in right now. I just quickly were typing them out so that you could see it. I'm going to advance to the next slide that I just created, and you can see them right there. First thing is, how many members do you have on your team that's dedicated to this new program?
There are currently 5, with Steve, my father, and I being the main ones.
I see. And how long have you been working with the Turtles?
Well, let's see. Around 20 years ago, we were working with Larry Williams at a seminar in Las Vegas, and Russell Sands was one of the guest speakers. Larry and a few other presenters needed some help with their software at the time, so that was the first time we met Russell, and we've been working with him ever since.
Wow, that's incredible. And I heard you mention Larry Williams. That guy's the master of the futures. In fact, he's the one that's responsible for the Williams Index. Isn't that right?
That's right. That's right. He's been around forever.
Wow. And how did you come about choosing stocks? Because I know that your history is through commodities and the Forex. How did you evolve into stocks? How did that idea come about?
Well, as you know, the Turtle Forex, the Forex, and Balanced Trader Index future systems had existed for a long time. We started programming and testing the ETF system around 5 years ago, and then released that system around 3 years ago. So the stock market was the next natural step.
I see. And what type of stocks are you trading?
Well, with options, trading can be thin with smaller companies, so we stick with large cap companies that have options with higher volume. We also filter out the stocks that are not trending.
When you say higher volume, why is that so important?
Well, you want to get a good price getting in and out. So if the volume is thin, the bid and ask spread, will spread too wide, and you'll end up paying too much and getting back too little.
Oh, I see. Okay. And what are some of the stocks that you've been trading? What are the exciting stocks that you've been looking at?
Well, we monitor around 30 stocks at a time, like Apple, Disney, Microsoft, Starbucks, just to name a few. And I'd have to say that all the stocks on our list are exciting.
Right. It sounds exciting. And who hasn't had a latte at Starbucks, right?
Yeah, that's right.
Is this system technical, or is there any fundamentals involved in your trading approach?
The emphasis is on technical analysis, mostly reading chart patterns.
Mm-hmm. And can you give me an idea of some of the indicators that you use?
Turtle is a breakout system, so we of course monitor new highs and new lows, but there's a lot more to it. We use average true range, moving averages, along with chart patterns and projections.
I see. One of the things I noticed that was very, very unusual, and I mentioned that earlier in the beginning of our webinar, is in the performance summary during that 18-month period for the stock program, it just shows an absolutely bloody fantastic return. I mean, it's just incredible. But what was really unusual and unique, and even maybe a little kind of strange to me, Jeff, is that the profit factor is actually higher than any other turtle system. I mean, this is really the highest profit factor that I've ever seen. It's even double the second best, which is the options on ETFs. More than double, actually. How did you guys come up with this, or how did you pull it off? Or, it actually wins more trades than it loses, which is the opposite of all the turtle systems. Can you please give me an explanation?
Yeah, that's right. Most of the time, stocks trend higher because the companies work hard to keep the shareholders happy. And because of that, they trend higher, and that trending creates a higher profit factor. So the bottom line is, if the stock is trending, Turtle makes a lot of money.
I see. Wow. Well, are there any other new opportunities from turtles on the horizon? I'm starting to like this a lot.
Possibly. As you can see, Ludovic, we're always analyzing the markets and putting the Turtle system to the test.
Okay. Let's go over an example of what a trade alert looks like for the turtle options on stocks. Here's an example.
Yeah, this is a stock alert on Wells Fargo that we sent out at a $1.17 limit, and this is what the subscribers see when we send out the alerts. And when the option is exited, we will send one out as well that is similar to this.
I see. Okay. And this is something that you've designed yourself, correct?
Yeah, that's correct. Yeah.
Okay. Well, good job. It's really clear, and I love it, and it makes everything much simpler. I tell you, this is really great. And this is an example of what you call a recap, correct?
That's the trade recap that we send out at the end of every trading day. And we split it up into different categories, as you can see. And any new trades, we'll list them. Anything that we closed out today will be listed. And everything that's open, we list down below the current profit or loss, as well as the current bid and ask, and all the information that the subscriber would need.
Yeah, this is really great. So in this example, you closed out a Las Vegas Sands Corp, and the remaining trades are open. Are these trades that you entered into, or they're just open? Is that what that means?
Yeah, we entered those. If you look at this, the date at the top, it's 7/26.
Oh, I see. Mm-hmm.
So the trade recap was for the close of that day. All those trades down below that were are stated as open, you can see under the end of day open position status, there's a column there that says date, and those are the dates that each one of those option trades were entered.
Right, I see. And by the way, that's a really impressive end of day open position status. I love that status. That's beautiful.
Yeah.
You're a little bashful and modest, Jeff, I have to say.
Yeah.
And then these are some of the rules. In particular, a lot of the viewers would really appreciate a detailed explanation of what you do in terms of your trading rules, and also in relationship to how you mitigate losses.
Okay. There's 4 different ways of getting out of a trade listed here, but there's actually 5, and I'll go through them one at a time here.
Thank you.
The 100% take profit stop initiates when a option doubles in value. So when this occurs, we exit the trade on a current close that is lower than the previous day's close, and that's after the option doubles in value. The 50% trailing stop, that begins when an option reaches 50% in profit. So for example, if an option yesterday was up to 75% in profit, but today it dropped back down to 25% in profit, we would exit. And these kind of market swings can easily go to a negative amount. So this protects a winning trade from becoming a losing trade.
I see.
Then we have what is called a 2N stop ATR, which is the 15-day average true range. And that's a hard stop that goes into effect at the time of entry. So this figure never changes. So in other words, it's not a trailing stop. The 4th, as you see listed here, is the 9-day low stop, which is trailing. And it's the lowest low within the last 9 days. The 5th stop is a 50% loss. So if an option, let's say we get into it and it's for some reason, Trump sends out a tweet and the next day it goes down by 50% of our entry price, then we'll exit the trade.
Oh, I see.
Yeah, we monitor all 5 throughout the day, and we exit based on whichever occurs first.
Seems to me that these 5 variables are really critical in mitigating the losses, and that's why those drawdowns are so tiny.
That's right. Yeah.
Okay. Yeah, I love it. Here's an example of a stock trade. We picked Costco. Could you explain your rationale here?
Yeah, I do want to mention that these examples that we're going to see here came out of a report that will be free to all attendees of this webinar. So I don't have to go into great detail of.
Oh, okay. Thank you, Jeff. We appreciate that.
But this example on July 8th, 2019, the Turl system identified a buy trade in Costco. If you can go ahead and go to the next slide.
Okay.
And on this slide, it explains how we choose an option and how far out we typically go, as well as how long a trade normally lasts. With Costco, we sent out an order to buy the August 16th 275 call at 320, and we were filled at 315. Can you go ahead and go to the next slide, please?
Yes, I can.
So this shows you how Costco worked out, and on July 18th, the value of the option had doubled. And on July 19th, we had a lower close, so we sent an order out to exit this trade at 7.70 limit.
Yes, I can see that. Wow.
Yeah.
That is nice.
Okay.
Next one.
Well, this is Apple. We all know Apple. And this is July 5th, 2019. We had a buy breakout trade, and we purchased the August 2nd 210 call at 390. And if you can go to the next slide, please.
Okay.
And you can see the big spike up there on July 31st. That doubled the option in value. And the very next day, on August 1st, we had a lower close, so the trade was closed out at 6.92 for a gain of 77%.
That's fantastic. I'm going to go to the next slide, Jeff, if you don't mind.
Oh, okay.
This is, if you want to take it, Jeff, you can, or I'll do it, but this is the complete educational aspect of the service. Do you want to go over it with the audience?
Well, if you can go ahead and get it started and ask me any
Okay,
questions.
yeah, sure. First of all, you're going to be able to get the direct alerts that we just looked at with Jeff together in your email or your cell phone. Plus, you're going to get the daily market and the recaps that we looked at just a moment ago. You're going to have direct access to the Turtle team for any kind of educational questions regarding the markets or the methodology. Can you just expand on what that means, Jeff, for the audience?
Yeah, most of the calls will go direct to Steve first. He's the first point of contact, and then any other questions that Steve cannot answer, then they're directed to myself and or my father, Dwight.
Okay, great. Yeah, well, Steve's got 25 years of experience. He's one of the head traders there, and he'll go over if a subscriber would like the entry rules, exit rules, how the Turtles team picks the options on the stocks. That's included in the educational aspect.
Yeah, that's correct.
Of the service. The other thing too is that for some individuals that aren't self-traders, we do have access to third-party registered brokers. So it's just an option for people who just don't have the time to trade totally on their own. And then there's a list of authorized brokerages that we use here in the United States. The final thing too is that you will have access to my company, FFR Trading, and myself, Ludwig Catino. You can always give us a call. We're always happy and excited about assisting you during the service period. And that's basically it. It was really quite a thing, Jeff. I really want to thank you again. I don't want you to get blush, but it really, really, truly is an honor. For the attendees of the webinar, there is a bonus stock turtle options report that's gratis, free for those that have attended. You'll have an opportunity to trade alongside the Turtles team. We've negotiated some fantastic discounts for your participation as an inducement to get going and take advantage of the last couple of months of the year, which are really dynamic. And you'll also get a copy of the webinar, which will be sent to your emails that you used when you did attend this webinar. Well, in closing, Jeff, I want to say you did a great job. I really appreciate you going over the academics and how you guys are so successful. It's just amazing. That account over 500%. So I really appreciate the time that you've taken from your day, and the rest of the audience members. If you have any further questions or you just want to hurry up and just get started, take advantage of the huge discounts that were made available. Call us directly on the toll-free number at FFR Trading. We're your investment strategy partner since 2006, or email us. Again, Jeff, thank you so much, okay? I really appreciate it.
Anytime.
I'm looking forward to the next webinar. For those of you there's a few of you that just got logged on, we do these webinars and these international economic summits, usually one per quarter, sometimes maybe just 2 times a year. So anyway, thanks a lot, Jeff. You have a great one.
Okay, thanks for having me.